Good evening, traders, and welcome to another StockX post-market recap with your professor. Today, we're going to be going straight to the point and talk about what's going on in the market and share our prediction about what's to come into tomorrow's trading session. Yesterday, we spoke about how our model allows traders to find when the best entry to buy and sell, but today we just want to make sure that you guys know exactly what's happening in this market and you guys can make the right informed decisions. Now, it is possible that we may be wrong about this analysis, but we are already transparent. We shared this information on Twitter. Most of the time I do find myself being correct, but there can be instances when we may be wrong. So I want to be transparent with you guys, share exactly what I think may or may not happen tomorrow, and we're going to go into great detail. So this here, of course, not financial advice, for entertainment purposes, and I hope you guys enjoy this quick little recap. Hopefully it's quick about what we're going to be talking about. So in today's trading session, we're basically seeing that SPX did have a strong backward movement after the CPI report that came out. Now, the CPI report that came out was lower than expected. But when I saw this number, I pretty much even mentioned on Twitter that it was meaningless, because with the tariffs that are kicking in on April, it doesn't matter how good the CPI report is, right? Because the inflation fear kicks in once those tariffs kick in, and that's what causes uncertainty in this market. Based on Fed Powell's recent discussion, he pretty much doesn't have any clue on how this will impact the market, right? He did mention that the economy is strong and he will only make his decisions when he sees the data. So that doesn't give the market any sort of confidence whatsoever. Now, based off the CPI report, you see that the year-over-year estimate was around 2.9%. It came at 2.8, and 0.2 was a month over month, which 0.3 was a forecast. Now, if you break the CPI report down, much of it had to do with the reduction in the travel side of things. So, that's a whole different discussion. But, overall, I pretty much came in today saying that the CPI would be meaningless. Because if you guys look at futures, the futures high was basically at around 56.68 zone. And we opened at around 20 points lower than that, and then dumped all the way to 55.45. And that was literally near yesterday's low. And you guys can see that as well in the timetable. So our key levels for today on our gamma report. So first thing, let's talk about our gamma report. So we explained the market situation, that metals were moving. And we said that basically in the call gamma, it showed that 56.30 would be potentially the top, right? So you see that right over here, around 56.30, 56.40 is where you start to see majority of the selling here. And that didn't hold. So the bullish gamma that we had set up was 56.20. You can see that multiple attempts that this was rejected right there, okay? The bearish gamma is at 5600, which was right over here. So I also mentioned that it's possible in my morning call that you could be chopping within these two ranges here, which is exactly what we had seen today. Now, in my final thesis, I mentioned that we're likely to see volatility, which is true. You've seen a huge dump and a rip and then chop all the way through the end. And I also said I give the edge to the downside because our SPX neutral range, which is this little blue range over here, is the downside. So that's where SPX dumped to, right? And our neutral range is discussed right over here. So I pretty much confirmed on Twitter. So in my Twitter feed, as you guys can see over here, I pretty much mentioned that we can go to 55.70 and 55.80. That was when SPX started to really pull back, and we had confirmed that, okay? So a lot of our members did pretty well today, including my friend Slacks. He used that information to pretty much see that if SPX was to dump, then you bought some in the money stuff, and a lot of our members also benefited off our small account trades. So in the small account trades, we gave two great trades today. The first one was pretty much they put sorry for that was yesterday. This one didn't actually fill, but this 480 call was a nice scalp that went from around at the time when I see right over here, that was around a couple of like 70 cents, I believe. So it can work as a scalp. So that was a 480 call. Sorry, it was around 70 cents, and it went to $1 and plus even more. And then we gave a swing, which was the same one that we shared right over here. This trade idea for everyone at around 2.35, and then right after that, it just literally ripped to around $3 here. So, transparency is a big part of our StockX mentorship program. We always make sure we show the before and the after, and we make sure that there's no edits done on our posts. So that's very important to us because we really want to make sure that our members get the concise information. On top of that, guys, we also have Voice Log, a transcribe bot that transcribes everything I say and do in the voice chat. So I talk live on voice every single day from market open to market close, and we do our morning calls as well, which go over the game plan. Now, besides all that, let's talk about the real reason you guys are here today is to discuss where I see the market going forward. So where I see the market going forward is pretty much dependent on a lot of key factors, right? So we know that Trump's tweets have been pretty much moving the market. And if we look into great detail, I've noticed that a lot of these stocks, like, coin, you see that it hits my level 3 bearish right on the money. And on Friday, I'll show you guys a confirmation that these levels are, of course, given to the beginning of the week here. But a lot of these stocks pretty much had a catastrophic drop on Monday. So let's go back to it. So you see right over here, our S&P 500 level 3 bearish was hit, and this was the literally exact bottom. And every time SPX recovers, it hits this 50-day moving average. Now, based on what I see right now, I've noticed that the put premiums have pretty much bottomed because the volatility and the ups and downs, all the market makers were doing is pretty much causing the premiums to squeeze lower so that they become cheaper. Because if you guys have played puts, what you would have noticed is that for 50-point dump, you're not getting any sort of wins on a strike that has, like, let's say 0.2 delta, right? You're not making money off these puts. So what happens here is that when you're near end of the week, which is where we're closing in on Thursday and Friday, the premiums are pretty much a lot cheaper and they become more explosive because they're pretty much near the end of their maturity. So based off that here, on the CPI report, you haven't seen this 5640 breakup at all. And we have gone below the JP Morgan collar roll number, which is 5565, and we've seen that multiple days. So I believe that we're probably going to be opening on SPX around 5550 to 5530, okay? There's also news that, hedge funds have seen unprecedented selling in this market. So that's going to be key to remember here. With QQQ, we were very close. You pretty much just stopped around near our level, our bearish breakdown, but it's very possible that QQQ can go to 465, okay? And for IWM, we didn't do levels on this week, but for NASDAQ, we also call the bottom on this so far. And we believe that it's very possible that this can retest back to the bottom here as well because of the unprecedented selling. NVIDIA, you see here, it pretty much hit our level 1 bearish. We had calls on this temporarily, but we sold it around 110, and they hit this 116. So if NVIDIA fails to hold this 116, it could see more downside trend. Tesla, same thing. It hit our bottom right exactly on the money, popped his level 1 bearish retest, and very possible to come back down here as well. So let's see if this continues to break through. If it can get through 260, then it can obviously run but it's very possible that it can either A, chop in this range, or B, break down to its lows again. So if you look at the put premiums, pretty much have bottomed after reaching a climax, right? So these put premiums peak, they start to cool down, and then they become a lot cheaper as you get closer to maturity. So it's very important to watch that as well. Meta, pretty much did get through level 1 bearish share, so I'm not too much of a fan of Meta right now. Its premiums are really crazy. Very hard to play Meta in this market, guys. If you're playing Meta, you better sell it quick, okay? Because it's going to be tough. MSTR pretty much bounced right off our estimated weekly low, and we're looking at that, okay? So very important to watch banks here as well. It did hit our level 3 bearish at 525, but we're watching to see if this can continue its path down moving forward. Now, the biggest risk in the market today has to do with the looming potential government shutdown. There was news that suggested that there's not enough support to sign the bill off in the Senate. Now, as time winds down, the uncertainty level rises. And we do know in the past that within the Trump administration that there's been over 3 government shutdowns in his last term. And that's very important to remember because he has precedent history of having numerous government shutdowns. And a lot of his policies are non-bipartisan amongst Democrats. Some Democrats are actually protesting to not agree with any sort of Trump bill because of the DOGE cuts, which is becoming a big problem. He also has issues within his own Republican Party. So this in itself, if a government shutdown was to happen, can cause more uncertainty, can raise yields, and that can certainly cause a bigger drop in the market. If a government shutdown happens, that means essential services won't go through, and you're going to see a massive issue within the U.S. government. So that is, in my opinion, the biggest risk. Now, there is possibilities that the market can move the other way, but my personal belief is that we are going to see another red open, and considering that today's low was around 55.40, I think we're going to retract back to those zones, and based off that level in itself, it's fair game in terms of if we pop and hold or anything like that. But I firmly believe at this time, based on what I see, is that we're going to be opening between 55.50 and possibly 55.35, because 55.35 on the S&P 500 is my level 3 bearish, and that has been the bottom in this market. So that's going to be the key level to hold. With the JP Morgan call or roll around 55.65, the market is suppressed on breaking down lower, because that is where the JP Morgan pinned the market's bottom. So you constantly see covering there. But we will see if the market, if it ever does break that 5,500 level, you're looking at a 60 to 80% chance of a limit down. So we are literally on the verge of that. And with this potential government shutdown, anything is possible. So thanks for tuning in, guys. I hope you guys enjoy this video here today, and I'll see you guys in the next one. And I look forward to the update on where we see the market opening at into tomorrow's trading session. So take care, enjoy yourself, and have a wonderful one.